Hey folks, it is December 31st. Welcome to the last edition of Business Redefined for 2024. What a series it's been, what an intense it's been, especially on the public finance side, and we want to close again on that note. Matters public finance, we are privileged to have Fred Kimotho, Associate Director at Deloitte East Africa in charge of tax policy as well as tax dispute resolution. We are privileged to have you on set. Karibu sana.
Thank you very much, Julius. Thanks for having me.
We want to talk about the latest tax laws amendments. We have seen the Tax Laws Amendment Bill, now Act 2024, as well as the Tax Procedures Act of 2024. Starting off, Fred, what's your sense around the two laws when you look at them? Are they good? Are they bad? What are your highlights?
Very good. Thanks again, Julius, for having me. Are they good or bad? Considering where you're coming from, considering Finance Bill of 2024 and the approval we got, we could considerably say that the Tax Laws Amendment Act is one of maybe one of the progressive acts that we have probably seen. There are quite a number of things that you could see in that particular act. Top among them is the government trying to give back to the employees. You might have seen the Finance Act of 2023. It went all out on the employees in terms of introducing levies, in terms of introducing top tax brackets at 2.5% and 35%, which then means that the employees were left worse off. So we have seen a bit of effort to try and now a bit caution the employees a bit by, first of all, introducing deductions from their taxable income. Top among them is affordable housing levy. We have seen quite a number of good positive changes. Top among them is the government trying to give back to the employee what would arguably say it had taken away from them at some point, not 100%. Top among them is deductions of allowable deductions when you're living at the taxable income, affordable housing levy, social health insurance fund. Those are some of the deductions that we're going to be seeing effective this December. As well as, we have also seen some of the benefits like non-cash benefits being taken up. Things like the pension, the threshold increasing from the current 240,000 per year to 360,000 per year, which is good. So we're likely to see a good, a positive impact on the employees' pay slips, which is good for the disposable income. Is it optimal? Will employees feel like they are now home and dry? Maybe not. They still need probably to review the levies that the government has introduced in the recent past. I think there could be need, for example, to review some of those levies, like the SHIF and the affordable housing levy, and probably introduce a threshold so that then employees, especially the ones who earn maybe slightly higher amounts, do not feel like they are being, they're contributing so much, which is probably not commensurate to the benefit that they actually are getting. From the other side, from a digital economy perspective, we have seen the government efforts to overhaul the digital service tax and replace it with what is called significant economic presence tax. The only downside of it is that effectively the rate has been doubled. You remember the digital service tax was actually introduced sometimes in 2021. Now within a period of 3 or 4 years, we are seeing now the rate being doubled. It's actually not good for the economy, considering that this tax actually targets the non-resident companies. It would have been good to moderate the rate at which we increase that particular rate. But overall, from a Tax Laws Amendment Act, I think we have good things. And also maybe the other bad thing maybe to mention, I don't know whether to say is bad or not, but since we mentioned the employees, I think it's good to mention that we have seen a reintroduction of a proposal on reimbursement of expenditure that is cut by public officers. And the law is worded so broadly that it could actually be subject to misuse. So there are 3 things that I actually see, problem with that particular law. Number one is that it has been introduced actually post, the public participation, and not to forget that there was an attempt to introduce in the last 2 years, and it didn't pass. There was overwhelming feedback from the public that it was going to be abused. Number 2 is somewhat discriminatory because then it is only applicable on public officers, which then means that colleagues in the private sector will not be able to enjoy it. And of course, number 3 is if you look at the drafting, it is very broadly drafted in such a way that it goes ahead to say that it is you get that reimbursement and you're not taxed on it, notwithstanding the ownership and the control of the asset that you have actually purchased. So such provisions are likely to be abused, but we hope that they will be probably implemented in the betterment, in the overall good of the people. But it is one of those maybe that I would say under the Tax Laws Amendment Act is probably not very welcome. Maybe moving on to the Tax Procedures Act, quite a number of good things. You have seen the amnesty now. The amnesty is back. The good news is that the base year has also been revised from 31st of December of 2022 to 31st of December of 2023, which is a very, very welcome move. The only thing that, and I don't want to sound like, we are not content with what the government has done, but maybe someone would argue that maybe the deadline for payment of the taxes would have been moved forward from 30th of June of 2025 to maybe 31st of December of 2025, just to give companies the reprieve to, number one, ensure that they review their records. Sometimes they need to engage, external consultants, and as well as maybe them also being able to mobilize the cash flow for them to be able to make that payment and take advantage of the amnesty. But overall, I think the two acts are good, to say the least.
To the point you're making around cash benefits for public officers, and the question I raised online and sparked a lot of heated debate and divided opinion was, isn't it in contravention to Article 116 of the Constitution? Because Article 116 provides that in the event that members of Parliament pass a legislation which is to their benefit, it only kicks in after the next election cycle. So I was asking, does this provision kick in after 2027? If it kicks in on December 27th as provided as the effective date, is it a constitutional provision?
Good, I actually saw that. And by the way, if you look at the way it is worded, it is actually going to be applied retrospectively, because the date that they put in there is 27th of July of 2022, which means that then the likelihood is that it's going to be applied retrospectively. Now, looking at the article that you have probably mentioned, maybe the only question would be, given that it is applying to all public officers, does it then, is that article strictly then interpreted when it is only affecting the members of Parliament, or when maybe there are other additional public officers added, maybe it may not. But it remains to be seen. Maybe it's a question that the courts should interpret.
I see. You touched on a very important thing within the Tax Laws Amendment Bill, which is the switch from digital services tax, which has been in place since January 1st, 2021, and now coming into the significant economic presence tax. And this is one of the provisions which I had hoped that we would see the effective date kicking in once we see the regulations. Clearly that is not happening. Fred, I think we have a problem here. Do you share that view?
Yes, I do. And Julians, if you look at most of our effective dates, you look at even the payroll taxes, the effective date coming just on 27th, for example, of December, and you can remember the apple that was out there in terms of people asking, is it going to apply, the whole of December, or is actually going to be prorated? There's quite a bit of a debate there, and in some other jurisdiction actually. And maybe just to also mention, if you remember the Tax Laws Amendment Act of 2020, number 1, you remember that actually most of the provisions became effective on 25th of April of 2020. The question then begs is in terms of, for those taxes that are not transactional in nature, is there a problem? How do we ensure that people don't get unnecessarily into unfamiliar territories in terms of asking themselves, at what point do we start complying? So as far as the effective dates are concerned, I think we truly need to think about them, as a country and as registrators. And most importantly is for income taxes, it is always good or safe to ensure that they actually coincide with the financial year, especially for corporates and of course for individuals with the calendar year, which is the year of income for an individual. But then also tied to that is of course the question that you have asked, which is very, very important in terms of regulations. And I think there are two of the amendments that actually require regulations. Number 1 is the DST, the repeal of DST to SEPT. And also number 2 is the introduction of minimum top-up tax. So those two require regulations for them to be effected. I can tell you as we speak now, you have so many questions from multinationals in terms of when are these regulations coming out. Because next week they're actually supposed to apply these new laws. So it would have been good, and I have seen that in the past, where the effective date is actually pegged on the gazettement or publication of the regulations. So I probably say that is a misstep this time round, but we hope to see it being done properly in the coming days.
The amnesty, if you look at the Tax Procedures Amendment Act, one, the base period has been varied to December 31st, 2023, and many of us, myself included, were clamoring for that. But the question that is being asked by the authorities, and I think legitimately so, is that are we creating a culture where the taxpayer is habituated to amnesties? Remember, we had the voluntary tax disclosure program. Then at the end of 2023, we had the 60-40 kind of amnesty on interest and penalties. Then we had the 2023-2024 tax amnesty. And now we have this one. And now that we've varied the base period, it effectively makes it a new amnesty.
Yeah, very good point, actually. And if you do a bit of research, you'll see quite a number of others who have written about amnesties and how sometimes they can end up not achieving the objective that they're supposed to achieve. Because if I know for sure that after 4 years there will be an amnesty in Kenya, you may just have to wait then, and use that cash flow for other things, for other reasons. But I'm sure that businesses in Kenya are not that problem-malicious. Maybe the question that we need to ask ourselves is why, what was the case for an amnesty, and especially the current one that now is the Tax Procedures Amendment Act. And in my thinking is that when you look at the previous registration, you remember there was abolition of waiver of penalties and interest, actually around the same time, sometimes back in, I think January of 2023 or thereabout. So maybe there is merit in terms of, number one, there was no transition. There was no transition period within which people were prepared that there will no longer be, waiver of penalties and interest. Maybe it is one way of then saying, you guys, take note, there's no waiver of penalties, and maybe it justifies when then the amnesty needs to be reintroduced. But also the other reason, I think, is when you look at the migration, what we call legacy balances. Yes. Remember, just before 30th of June of 2024, that is when the amnesty was about to expire, I think someone somewhere realized that there was a lot of debts within the systems. And taxpayers received a lot of notices telling them, yes, or demanding taxes from them, some of which have a lot of penalties and interest loaded on top of them. So I would then imagine that maybe the government is also trying to use the window, besides also mobilizing revenue, to use the window to ensure that those principal taxes that can be supported, the underlying penalties and interest would also go away. Considering that you don't have any provision for waiver of penalties and interest under the current law.
Fred, now that you've touched on the issue of legacy balances, ledger balances on the legacy system,
yeah,
December 31st is a sunset date that KRA gave a notice indicating if you have any questions around the migration from the legacy ledger balance to Itax, please raise it by DEC 31st. Because after that, they'll be taking measures. First of all, why is this transition happening for those who might not be very aware of what this is all about? And I have had taxpayers telling me they're getting balances going back to the 90s. How does that work, Fred? Yet I know that by law, KRA goes back 5 years max.
Yeah, I'm sure. I was sure that would probably come. It's quite. Today, if you speak to most of the taxpayers, that is actually on top of their matrix in terms of the issues that they're actually having to deal with. Because you can imagine if it's receiving a notice that you owe the Revenue Authority 1 billion, part of which comes from 1991, 1992, all the way forward. Of course, that is not a very good thing. How did we find ourselves here? Maybe just for the sake of our viewers, first of all, to step back. Migration of data of legacy balances to Itax came as a result of the transition from the legacy system to now what we call Itax. That transition actually happened in 2015. Prior to 2015, what we used to do, we used to file manual returns, and then the Revenue Authority would go in and key in the numbers that you have self-assessed. I don't know if you look at the newspaper those days, every 30th of June, for example, you would find people throwing returns at the fence of the Revenue Authority. Yeah. So as a result, it is legitimately so. Maybe some of the returns would be missed. And actually, for some of them that we have actually updated, we have noted that the data was actually not captured. Yeah. So that's how then that issue came. The taxpayers, most of the taxpayers did not have the view. You know, unlike Itax today, you can log in and tell how much penalty or interest that you have. That time you had to go to the revenue authority for them to give you your statement. So, so then what is happening in terms of then transferring those legacy balances is saying what was in the previous system is being transferred to the current system, which is obviously then coming, is it almost 10 years after the event? It's probably unfair to say the least, especially to the taxpayers. You can imagine, Julians, if you, for example, acquired a company just recently, and there has been so many companies that have changed hands. I don't know what you do in terms of, do you go back to the shareholders and tell them, you know what, you had this debt? And some of them were actually not aware, because remember, as I said, for the legacy system, the taxpayers didn't have access to the balances that were in there, unlike Itax today. So maybe it's a question of then asking ourselves, how do we solve the problem that is there? And I think give it to the revenue authority. To some extent, they have extended the olive branch by saying, you have the balances, please go ahead and try and reconcile where you can by 31st of December. The only issue is that it sounds like it's an ultimatum, yet, you know, from where I sit, for example, I would probably think that someone would fault the revenue authority for them not coming out for so many years. Someone would have thought maybe in 2015, when the system was being transitioning, would have probably come and told people to clean up. Then you can't wait for 9 years and then go back and ask the same questions. So going into 2025, after the 31st deadline, I see a lot of disputes that will happen. As you rightly put it, the Tax Procedures Act requires the taxpayers to maintain documents for a period of 5 years. Even if you are to go outside the tax statute, you go to the Companies Act. The Companies Act expects you to maintain documents for a period of 7 years. So that means then, under the law, you may not have any document beyond 7 years. Yeah. So I see a bit of maybe strong case for the taxpayers. I wish there could be a way of sorting out the issue without necessarily dragging taxpayers into disputes, because the outcome is almost known. And now that we have we have the amnesty, and we also have a provision under the Tax Laws Amendment Act on abandonment. Maybe this is one of the areas that the Commissioner, in consultation with the Cabinet Secretary, could exercise their discretion and maybe abandon some of those taxes, because I see a lot of challenge in terms of the taxpayers being able to reconcile back to those particular years.
And now that you head up the tax dispute resolution for Deloitte, there'll be disputes. That's a fact, Fred. How do you see the way forward? One is that you've said we could take advantage of the amnesty and the abandonment. Beyond that, is there any recourse here?
I mean, and by the way, it is not coming for the first time. There are quite a number of taxpayers. It's only that now it is being done to everyone. Yeah. There are quite a number of taxpayers who have in the past gone, for example, to apply for tax compliance certificate, and they have been told, wait a minute, you have a debt of 200 million in 1997. You didn't file your VAT returns or something of the sort. So what I see, as I said again, is a lot of disputes. The unfortunate thing is that I do not know whether, besides the discretion on abandonment, the Revenue Authority has any other recourse in terms of, because there's an argument that they also put forward that this is a debt that you self-assessed, in the return. So they put then the argument that I'm just correcting what is right-free mine. So to the extent that it is your word against mine, I don't see that ending up anywhere else apart from our courts.
Fred, e-teams. The Tax Procedures Act has introduced a threshold for reverse invoicing. 5 million annual turnover and below, essentially being aligned with the VAT Act, has kicked in now that we have the Act in place. One, for those who might not be aware, what is reverse invoicing? Then two, Deloitte is one of actually the only institution in the submission during the public participation who said that the solution around e-teams is to amend Section 16(1)(c) of the Income Tax Act, whereby you are demanding that for you to make claims on expenses, they must be backed by e-teams invoices. Of course, it didn't see the light of day. Yeah. Do you see reverse invoicing as the silver bullet now? Do you see it giving us the reprieve we need around how to roll out e-teams?
Very good. Thanks, Julius. And I think e-teams is quite a topic of conversation. And I've seen quite a number of people write on it, including yourself. And I must say that that was a very well researched article. So when you look at, just stepping back a bit in terms of how we found ourselves where we are today. So it is under the Finance Act of 2020 that the government thought we can introduce e-teams, and it was said that you have to register for e-teams by 1st of September of 2023. You are then required to have registered and complied, so that then by 1st of January of 2024, you are actually not supposed to take a deduction for, invoices are not e-teams generated. So the key thing to mention is that e-teams then has like two legs. And for avoidance of doubt, by the way, and for record, Deloitte is not opposed to the introduction of e-teams at all.
For the avoidance of doubt.
For avoidance of doubt. And by the way, the reason I say that is because I think, even from where I sit, I think that e-teams is good for the country because it will expand the tax net. Yeah. The only question is then, are we doing it in the right way? Because remember, e-teams has quite a number of things. It has a technology aspect of it. It also has, changing the culture of the people. The question is, can you do that in 3 months, Julians? Because that was, if you look at the law, that is like what was envisaged. So, and that is why then we are saying, go ahead and implement e-teams. But then even as you implement e-teams, as far as income tax is concerned and for deductibility, allow taxpayers who are compliant, but probably dealing with some of these guys who are still trying to onboard and being supported by the Revenue Authority, for them to come on board, allow them to take a deduction of the genuine business expenses. I think I was discussing with someone today. If you go and pick a license today, for example, from one of the county governments, I'm not sure they're giving e-teams compliant invoices. Does it mean that it's not a genuine business expense? It is. It is a genuine business expense. So you should then be allowed to take a deduction for that. And I'm sure maybe the government is working together to see how they can craft a solution from that front. You also remember implementation of e-teams was actually delayed for a period of 3 months. There was a public notice that moved it from
Jan to March.
From Jan to March.
Correct.
That period from Jan to March, no one has told us about how to deal with it. But I at some quarters, I would hear that once we are fully onboarded, we would go back and now load the invoices for that particular period. But I think the problems that e-teams has had, we have not even had a chance of going back for that particular period. That's the basic reason as to why we are then saying, let's go ahead with e-teams, but as far as deductibility of expenses is concerned, so that we don't punish taxpayers who are generally claiming genuine expenses. Let's defer the deduction under the Income Tax Act for a period of, say, 2 years. Now, in regard to reverse invoicing, it's a fantastic move in the sense that if now you have revenue of less than 5 million, you can be supported. Reverse invoicing, basically how it is expected to work, and I'm sure it has already been implemented in some quarters, is that you as a seller, if you are not, e-teams compliant for some reason, it could be maybe you don't even have these gadgets that are expected, like the small scale farmers somewhere in the village. The purchaser who is purchasing from you can then generate for you an e-teams generated invoice. For you is just to accept that I've actually purchased this from this particular, I've actually sold this to this particular purchaser, which is a good thing. I hope it will help. But the threshold, for avoidance of doubt again, I think there are some quotas that are also misunderstanding it to mean that now if you have less than 5 million, you are not required to comply with e-teams. I think there is no threshold.
Yes.
It might have been there under the Finance Bill of 2024. I don't know whether you remember. I think it was the Finance Bill of 2024. It was going to exempt.
Yes.
It was $1 million.
Yes.
It was going to exempt people from e-teams if you have revenue less than the 1 million Kenya shillings. But for reverse invoicing, it's a welcome move, and I think it is going to probably support businesses. But again, for deductibility, I think we still need to think about it. We need to defy it to ensure that we do not have unnecessary disputes.
I see.
Yeah. And by the way, before I forget, Julians, even reverse invoicing, we are not the first big country, even in Africa, to introduce reverse invoicing. I think it would pay some dividend if you could also look at the countries that have introduced it. Key among them is South Africa. If you look at them, they have quite a number of things that they have introduced. They have quite a number of things that they have introduced around it. The purchaser and the seller, they're supposed to sign some form of a small agreement just to be sure that you're not just generating invoices for someone who actually did not supply to you. They also ensure that there's minimum data that is corrected. So, for example, if you are selling to me and I need to generate for you an e-Teams invoice as a purchaser, you're also required to give me your PIN. Because remember, the whole idea on this e-Teams conversation is to ensure that we also expand the tax net. So if you're dealing with people who are not registered for tax, then it will beat the logic. But it also remains to be seen how purchasers will be able to establish that you, Jurians, dealing with me, your threshold of revenue is less than 5 million.
We have been having a conversation with Fred Kimotho, who is an associate director at Deloitte, looking at tax as well as tax dispute resolution for the East African business. We've been touching on the tax laws amendments acts now that are in place, what they mean for taxpayers starting December 27th, and of course going into 2025 until we venture into finance bill, which again we have touched on in terms of some of the expectations. We shall keep you updated on the budget cycle for the current financial year 24-25, of course, which builds into the FY 25-26. Happy New Year, stay safe, and see you in the next year.